Hi traders and welcome to the technical analysis market wrap on Friday the 1st of July. So we've hit the halfway mark of the year officially now, and yes, look, the market certainly sold off a little bit last night, especially some of the key indices. So we'll jump straight into the charts. We'll have a look at the Aussie here on the daily. As we can see, we're starting to really push down past the level of almost no return. You know, this is the one where we're going to say if it gets past that 68 sort of, or call it sort of 70 area, if we get a close below there, yeah, this one's going to be in a little bit of trouble. There's no question about that. And it looks like it's being tested every single time. Like you can see that the highs are getting lower and lower each time. So yeah, it's a classic case of basically lower high, lower lows. And yeah, for all intents and purposes, that's effectively a descending triangle on the 4 hour. Well, you can certainly make a case for it. I mean, it's the triangle I'm talking about is here. And it's significant in the sense that, you know, if it, like now's the time, if it's going to break, this is around the time that it's going to break, or it's getting very close to it. And it is trading under the key moving averages. So what makes this, I guess, triangle, if you want to call it the descending triangle, significant is that it's at a very, very important position in terms of where the support lies. So around this 68, 70 area is very, very strong support. You can see it right through here, and you can go way, way back, and you can see how much there was support at this level here, right through this area here, and even as far back as basically 2015. So we know it's very, very significant in the standpoint that it's got long-term support there. So if it does break, it's going to probably add further significance to the potential fall. And where it can go is effectively, probably in the first instance, probably around that 6,800 is the targeted area. I wouldn't be looking for a big giant fall, much past the support in the first instance, because realistically, when a key level does get broken, it does get tested from below it as well. So it's one of those ones where it's got a little bit of work to do to actually convince us that it's going to go long. So we're really probably targeting the short more than anything else. But if indeed it does start to travel up, it needs to break past these moving averages and, of course, break this zone here, which is around that sort of 69.80 area. Effectively, it's not going to convince us that it's going long until it's actually closed the daily candle above 70 cents again. So that's pretty much what we're looking for here. Anything in between is just really trading noise. If we get a close on the 4 hour above the 69.30 area, which is basically the top of the triangle there, and above the moving averages, then we can start looking at potential scalps up to the 70 cents. So if you want to do a scalp long in that instance and get it to the first resistance point, that's perfectly fine, because there is enough meat there to actually get some pips out of it. But it has to do a bit of work to get that done, right? So we need a 4 hour close at the very least at above 69.40 area there to get past this area here, past the moving averages, and that leaves you about a 60 pip run to effectively try and break through and get to the resistance at 70 cents. Failing that, of course, if it does break down past the 68.60 area, which is the bottom of this triangle, then we know that the support has been broken. And you can play that two ways. You can either look for the shorts instantly and try and scalp it down, or wait for it to come back and retrace from the bottom. Quite often what happens is they'll come back and it'll touch it from the bottom side, and then that'll act as a bit of a role reversal. So you can play it both ways, but both of them are sound trades. But it's a little bit of wait and see at the moment. It needs to really do something. It's trading right at 69 at the moment. If it drops 30 points, then we know we're in business for the short. And of course, if it goes up another 10 or 15, then we know we're right for a potential long up to the 70 cents. So in the middle zone where either trade is okay, you basically have to wait for the confirmation on that one, and we will be fine. We'll move on now to the US dollar CAD. And yeah, look, this one's been really very sideways this week, really. Like you can see, we've had a bit of range, basically up to as high as 129.30-ish and as low as 128.30. So it's a 100-point range, fairly tight. And yeah, this speaks really for a lot of the US based pairs, actually. We'll have a look at the yen shortly, but yeah, it's been in a pretty tight range. What I do like, though, is that we know it's at a strong level of support, and it's still finding support on the 20 moving average. You can see here the 20 moving average is helping bolster it up on the daily chart. And that particular level, I'll put this line up there to really highlight it. This is exactly where we're trading right now. 20 moving average, but also we've got all of this resistance right through here. We've got resistance there, right through there, 3 touches there, and here as well. So, it's obviously quite an important zone. And it has managed, it tried to break down, as you can see, but both candles pulled up pretty aggressively. So realistically, we're expecting this level to hold and probably look for long opportunities up to the highs of around 130.50. And that's definitely a possibility. You need to go to the smaller time frames, of course, to actually get that in. You can see that we're kind of trading a bit sideways at the moment. It's been pretty flat and ribbony. But if we see a series of higher highs and higher lows on a 1 hour chart, that will be enough to get us excited. And yeah, we'll be basically pushing up and scalping about 80 to 100 pips up to around the 130 in the first instance. So not a bad trade, but it's really one of those ones where it's flatlining at the moment. Like, you wouldn't get involved right now, of course. But if it does start to trend up, then it's going to be happy days. If it gets above those moving averages on the 4 hour, which is the 20 and the 50 moving average there, we need to close on the 4 hour above 129. If we get that, I think it makes it very likely that we're going to start pushing up. So I think that's probably the key for me. I think we need to see that close above the 129. It's only 30 or 35 pips away, really. So it's not like it's a long way away, but it does need to happen to get me interested in that long. On the short side, if it breaks down past this level and actually gets a daily close below the 20 moving average, so yeah, daily close below the 128.50, then we're probably going to start looking at shorting opportunities down to the middle of this channel again. So around that 127.40 to 30 area, right in the middle of that channel, you can see we've got quite a bit of resistance and support at this level as well. All right, so what I'll do, I'll actually move that, move this up a bit, and you can see exactly what I'm talking about. So it's around that 127.20 area. You can see all of the support through there, and resistance, even though it went through there, it certainly came back from it, and right through here there's a lot of congestion in this zone. So really that's the target. If we get a break below the 20 moving average, so a break down below the 128.50 area, this is the area we'll be targeting, the 127.20 area. Okay, so pretty easy trading on both sides, really. And I'm not really biased either side on this one. I think I would be happy to go long and short. It just depends on what the candles do. If we get the close that we need, I'm happy to go in that direction. And I think they're very straightforward take profit targets. So it's pretty good trading on the CAD. So we'll move on over to the US dollar yen now. We'll go straight to a daily first and check that one out. You can see that we've been relatively sideways over the last little bit. Like, the range has been pretty tight for the last 4 or 5 days. We're talking about slightly under probably just a little bit more than 100 pips, but really, that's the channel that we can go to. If you go to a 1 hour, you can see that we've been basically inside this trading range. Not a bad, look, it's not bad in the sense that it's behaving itself from a trading standpoint, from lower highs and lower lows on the 1 hour, but I am finding this one a little bit difficult to trade in the area that it's in, knowing that there is potential intervention around the corner. So I'm kind of leaving this one alone a little bit. But if you do want to scalp it, you want to keep your trades fairly short on this one and really trade inside that range. I think that's probably the best way to play it. You've got support here on the 50 moving average. It's also a role reversal zone. You can see the resistance that was presented at that point here and through here. So we know 135.50 is pretty strong resistance. We've got a 50 moving average there also bolstering it up, and the longs, every time it's hit there, it's come back off. So realistically, 136.70 is as high as it wants to go. So if you are going to go long from this zone here, from around the 135.70 area, the 100 points that we're talking about, 100 pips that we're talking about, is all we're really looking for from this trade. And by the time it actually does a change of trend, so we need a series of higher highs and higher lows, then we start to look for the opportunities to get back up to that 136.70. So keep your trades fairly short on this one. Is probably my advice. I think I'd probably want to be keeping a scalping mindset for this one, so you can get in and out relatively quickly and let it play out on the bigger scale. What we've got also is a 20 moving average to aim for if it does start break down. So if we start to see a series of lower highs and lower lows, we know that we've got a few targets to aim for, and the 20 moving average is the first one, which is around that 134.30 area. So really, if we get a break on the 1 hour on the way down instead of on the way up, and we see another series of lower highs and lower lows breaking this level, then it's a pretty easy target. We're aiming for the 20 moving average on the daily, which is around that 134.40 area. All right, move over to the dollar index. Again, we'll go straight to the daily, and look, we had a bit of a resurgence off the 20 moving average. It was a pretty easy trade, really. I know I talked about it earlier in the webinars this week. that it was a pretty good short on the euro, really, and it certainly played out that way. You can see we had a big bounce off the 20 moving average. It was quite aggressive, shorted the euro down to a zone that was very easily tradable. We'll look at that in a second. But yeah, it found resistance where it's finding resistance all the time now, which is around this level of about 105. You know, it's going to be one of those ones now. If it fails to make a higher high here and actually breaks down and goes past this level at 103.50, it's going to be very, very significant for the shorting opportunities really on the dollar index. So it needs to, it's one of those levels now where if it doesn't make a higher high and actually close up there, that this weakness is going to start to set in, and then we're going to see probably a breakdown of the 20 moving average and yeah, longer term longs on the euro. We'll go straight to the euro now anyway. That's the one we're really talking about. That short was a very yeah, easy short. Hopefully you're able to take advantage of that because it's all the rules that we talk about all the time. Got down to as low as the 103.80-ish area, which is the target that we were basically setting. And then it had a pretty decent rebound, nearly 100 pips up on the way up. So, you know, look, it's finding itself now at the bottom of that zone where you can see here, this was a very strong support level for it at around the 104.80. It's sitting right underneath it now. So, you know, it could pull up a little bit further to the 20 moving average and then maybe look for shorting opportunities there. But really, we're playing the long-term game here and thinking that dollar index is going to go longer. If it doesn't go longer, the euro is certainly not going to go shorter. So whether it finds the support that it needs at this level and actually starts to move up is going to be really, you know, subject to price action. So what I'm doing here is looking for a trap effectively. While it's trading under the 20 moving average, I'm only looking really for shorting opportunities down to the lows of around the 103.80, which again, it's already been hit, so we really should have already taken it, and hopefully you did. But now we've got opportunities to maybe do it again if it gets around that 20 moving average. But I'd be paying a lot of attention to what's happening on the dollar index though, because that's going to govern what is happening here. And there is a high possibility that it might lead the way and give you just that little bit of a clue that it might actually happen slightly before the euro actually moves. So if the dollar index starts to move and the euro hasn't, we know which way this direction is going, but hopefully you're able to catch that trade. So long above 105, if it starts to trade above 105 on a 1 hour close, we can start targeting the 20 moving average, which is around the 105.50, absolutely scalping only. And then of course, if it fails here and starts to make a series of lower highs and lower lows, we'll see if we can get it down to the 103.80 again, which will be the logical target. All right, the last one we'll have a look at is the S&P 500, of course. This one is, basically it did exactly what you would expect it to do at this level. Classic role reversal zone. I talk about it all day, every day, and that's because it continues to work, and it has for ever since anyone can remember doing technical analysis. A level of support becomes a level of resistance. It's a key level, obviously, which was 3,900. So no real surprises here. When we saw that weakening candle, especially when we saw this one, it was doomed for a bit of a short. How far it goes now is going to be, really subject to the price action, of course. Around this level here, we know the 3,750 level is pretty strong, and it did bounce off there and found quite a bit of support at this level and bounced off. There's no real MACD divergence to speak of. You can see the MACD peaks, or trough, on the bottom here, are level, even though we've got the price making a lower low. So it's not really giving us the signal that we want. That's probably, I would ignore it completely actually, because we're not really getting anything. But in saying that though, if we fail to hold up above 37.50, it's going to look very, very close to that 36.50. It's going to take a decent crack at it. Let's just say that. If it's going to be a weakening market in the US tonight, which we don't know, of course, but if it does start to weaken and we get a close below this level here, which is the 37.30, or 40-ish, probably if you go on the absolute bottom of the candle, that's going to be a very bearish sign for it next week. Okay, so if we do get a close below this level on a daily chart tomorrow morning, Monday, we would be looking at shorting opportunities down to around that 36.50 area. That's the first target number one. If we get a close above this candle though, and we get a close above 38.20 and it's looking bullish, we can look at trading it back up to the level that it actually sold off on, and the 20 moving average, which is around about 50 or 60 points from there. So it's not a bad trade. It's pretty good scalping on it actually, but you've got to really let the market play out now and see which way it breaks through. It needs to break one of these candles, unless it's an inside candle. Of course, then we're a little bit confused for what's going to happen next week. But next week, same deal. If it breaks it on Monday instead of tonight, then we trade into that direction. I think it's the only way we can really play this one, because it can go both ways very, very easily. I don't even have a bias now, because I think it's broken down enough. It can easily get down to 36 to 40, just as easily as it can get back up to this level at 3,900. So let the candle break, and whichever way it breaks is the direction that we take, and that's the most likely scenario for it reaching its potential target. So hopefully everyone's had a great week's trading. I think we've had some really good opportunities this week, and technicals have played out quite nicely. So we've got some key levels that we've set up now. Set your alerts for them, and hopefully you'll be able to participate in those trades if they hit them in the time that you're actually awake and able to trade. Have a great weekend, everybody. I look forward to seeing you all next week.